In this video, I will be revealing my personal strategy that has over an 88% win rate that I use to make over $10,000 a month every month. This exact strategy is the same strategy that ICT teaches and says that you can use this strategy and this strategy alone to quit your job in less than 90 days. If you're not profitable, if you are trading and you're a break-even trader or you're unprofitable, stop everything you're doing right now and take extensive notes on this video, because this is the only video you need and the only strategy you need to become profitable. All right, without further ado, here we go. So the reason why this strategy is so great is because, one, it is simple, but also two, it is mechanical. And by mechanical, it means it takes out all of the guesswork of should I do this or should I do that, or I'm not sure, things are not clear. No. We've taken out of all of the thinking out of the equation. All right. So how this setup works is that first you want to mark the high and low between midnight to 8:30. All right. So I've already started that. If you can see, this line right here notates this vertical line right here is midnight, and this right here is 8:30. All right. So this horizontal line right here is the midnight to 8:30 high, and this horizontal line right here is the midnight to 8:30 low. You can see at 6:40 a.m. we put in that low, and that at around 8:15 a.m. we put in that high. So that's the very first step that you want to do. Mark out the high and low of the day, right? Because price has not gone higher than this high, it has not gone lower than that low. So that's the first thing that you want to do. Mark the high and low. The next thing that you want to do is wait for a sweep of one either side of that high or low. So the reason why another reason why the strategy is great is because it is a liquidity reversal strategy. All these people, all this price action that happens in between of this range of this high or this low, we don't really care about. All right, bulls and bears are fighting over who's going to win. It doesn't really matter. We're just going to be making entries if we get our proper entry criteria at the edges of the range, giving us the best risk to reward. So as you can see, at around 8:43, we swept the highs, and so that is the very first. That's the next step. We swept the highs. So at exactly 8:42 a.m., price made the highest high it's made the entire day. All right, so that's the next step. Next, we want to wait for a market structure shift. So in this case, a market structure shift would be a previous candle close below a swing low. So as you can see right here, we swept these highs, and so to get a candle close, where's the previous swing low after this sweep? It's right here. Now, if you don't know what a swing low is, I can perhaps make another video on it. But basically, you're looking for a place where one candle it's the lowest low between the right of it and the left of it. It's the single lowest low, right? So as you can see, price came down here, took the highs, but failed to make a market structure shift below a swing low. And we don't also want a market structure shift. We want a market structure shift with displacement, and we want a candle close below the swing low. So price can't make a market structure shift there. Instead, it continues to go up. Now, this horizontal line right here represents previous day high. And so the reason why this is important is because this is a bonus extra confluence that price, if we do get a market structure shift, we're going to be very, very well. It's a high conviction trade, because if we go to the price action of the previous day, so I'm rewinding back in time. Here's the previous day's price action, right? This was Monday. Today's Tuesday. This was Monday. This is the same sort of thing, right? So it's the high and low between midnight to 8:30. And as you can see, at 10:55 a.m., price made the highest high that it would make today. And this is also Monday. So this is the high of the week. All liquidity is resting right here. This is the high of the entire week. And we just swept it right here today at 9:17 a.m. So now all of this price action that's above, that's all right here, is the highest that price has been this entire week. So yes, price can continue to go push and break out and make new higher highs. But if it doesn't, and we get our market structure shift, this is a high conviction play that we're now trading with the money, and that it is a strong case for a bearish reversal scenario. So not only did we sweep the London highs, that was this right here, we swept the previous day high, and now this is the highest price has been the entire week. So there's no more liquidity resting above us. I mean, there is, but it's previous week's liquidity. And so what are we waiting for? We couldn't get a market structure shift here, right? But we did get a market structure shift here. So why is this a market structure shift? Why is this a confirmed market structure shift? Because if we look at the previous swing low of this leg, here was the previous swing low. It would be more clear on a 2-minute or 3-minute chart. This is the 1 minute, and the chart is up to your preference. But we did get a candle close. Note that we didn't get a wick, right? We didn't just get a wick. We got a candle close, a candle body close below a previous swing low. So that's a market structure shift. So that's the next thing that we need. And then now we want to enter on the deepest fair value gap. So what is a fair value gap? It can be called a gap. It can be called displacement. It can be called an inefficiency, a void. Basically, we're looking for a 3-candle pattern where the first candle does not intersect with the third candle, leaving behind some sort of gap. You'll know that you get a gap or displacement when you see basically a large candle, right? So if you're seeing a large candle somewhere, like a large solo candle, that's a good indication that there's a fair value gap. You can see one. There's a fair value gap right here, of course, but this is the fair value gap that happened in the leg of the market structure shift. So we got a market structure shift. Now, is there a fair value gap in that leg that created a market structure shift? Yes, there is, because we can see the bottom of this candle does not intersect with the top of that candle. So here is our fair value gap. And we want to enter at the bottom of that fair value gap. We want to enter at the bottom because that would be the easiest place to get tagged in from. Because when a market creates a gap, it's basically saying price was moving so fast away from this price action that people that were trying to buy and sell right here did not get a chance to get their orders filled. The market doesn't like that, so typically it will come to fill that gap, fill that inefficiency before continuing in the direction that it was going. Now, we want to enter on the deepest fair value gap, so this would be our entry. And then as far as our stop loss, we want to put our stop loss covering the high or low. So in this case, we're covering the high. So this is not only the high of the day, but it's also the high of the week, right? So this is a very good case. Like this candle right here is the highest. If we went to the weekly chart, it would be right here on 18,405 or 18,406, right? That's the highest price has been. So we're shorting basically at the very top, at the very, very top of the week, right? So it's a great, if you're going to short anywhere, we're basically selling high, right? We're selling high, right? Sell high, buy low, sell high. And that's what we're doing. We're selling high and stop loss covering the high or low. And we want to target 1 to 2 risk reward. So this is 1, and you want to target, that's close enough, that's 2. So this trade happened today, and was suffering. We had suffered a little bit of drawdown in this first initial in our entry, but since we're covering the high, we were good. There's different variations on where you want to put your stop loss or things like that. Depends on how aggressive or conservative you want to be with your trading and your trading style. So we got tagged in at 9:37, and at about 10:27, so almost 50 minutes, we hit take profit for roughly 62 points. So that's what, $1,200 on the NASDAQ. Does it get any better than that? That's $1,200 on one contract. If you had more contracts, you can obviously do the math. And as you can see, or as I will now reveal, price would shoot down much, much further than that, right? It would go on to take the London low, which sometimes you can target, but that is not part of this particular strategy because that is not as repeatable and as mechanical as this. So just to go over everything once again, this is the Judas swing. This is the only strategy that you need to be profitable. If you're not profitable right now, just use this strategy. It's this simple. So you want to mark the high and low between midnight to 8:30. Right? Here's the high, here's the low, here's midnight, here's 8:30. You want to wait for a sweep of the high or low. We got a sweep of the high, right here. Next, you want to wait for a market structure shift. We got a market structure shift right there. You want to enter on the deepest fair value gap. Was there a fair value gap on the leg? Yes, it was right here. We get tagged in right there. Stop loss covering the high and target 1 to 2 risk reward. Now, because we knew that we had swept the previous day's high and actually the weekly high, you could have targeted London low, or you could have leveraged more on this account because this was a high conviction trade. But just to have a simple, repeatable, mechanical trading strategy, this is all you need to be profitable. This is all you need to get funded. This is all you need to start making $10,000 a month. If you found this helpful, drop a like, drop a subscribe, and I'll see you in the next one. Peace.